Hi traders, welcome back to the Village Trader Chats. I'm your host Njabulan Zabande, also host of the Village Trader Podcast, a podcast I host chatting with other traders, trying to learn from them and that sort of thing. In today's video, I'm going to talk about the box theory. I'll explain what that is in just a bit, and we're also going to be looking at some weekly charts from my weekly chart analysis copy from that comes out every Monday. If you want to get notified every time that comes out, do subscribe to the Video Trader mailing list. Links to all of those things in the description below. So before we get into some charts and the box theory, please do make sure that you subscribe if you're new. Hit the bell notification button so that you don't miss any of these videos. And drop a like, man, to support the channel. Thank you very much. So over the weekend, I was checking out a book, How I Made 2 Million. How I Made 2 Million in the Stock Market by Nicholas Davis. I encourage you guys to check it out. I'll leave the link to the audiobook on the description below. So essentially, it's a trend following system, and it works on just it's a breakout trend following system, and it's Nicholas Davis identified that stocks move up or down in blocks, which he called which he called boxes, which are essentially just ranges. And then I'm sure you've noticed that a stock will be in a range and breaks out, and then it'll be stuck in a higher range, and then eventually will break out. Sometimes stocks spend less time in some ranges, especially when the market is running either up or down. Sometimes the market will stay in for a very, very, very long time in one range. And when they do break, they usually become a thing of beauty. So how it essentially works, you buy into stocks as they're breaking into the new box. So the box would be stacked or above each other like this. So you buy as it breaks out into the new box, and you put your stop halfway through the previous box, or if there's a nice pullback low, or a nice swing low below the current box, that's where you would put your stop. It doesn't have targets, which comes with its own challenges. So you buy the stock and you add into the stock for as long as it breaks into the higher box, and you would get stopped out when it breaks into the lower box. And then you would essentially sit in cash if you trade that system on a long only portfolio. But then I suppose you could trade it on the short side as well. When you're on the short side, it must break to the lower box, and then you'll short it until it starts breaking into the higher box. So what I did when I came back, I was on a run when I was checking out when I was listening to this book. I started plotting these boxes, and I switched off the chart to see if there was any validity to it, and there was. In most of the stocks that I plotted into. So essentially that's how it works. As you can see, if this is a bar chart. This stock has been stuck in this box, or in this range rather, since December of 2014. So waiting for a breakthrough that 212 level, for a 3% break higher, for break and close above, breaking, if I can find words, break and close 30% higher above the 212 resistance level, and then I'll put my stop just below that lows there around 181, and then I won't have a target on this particular trade, and I will I will add into the position for as long as it breaks into the higher box, and I will get stopped when it breaks into a lower box. So the challenge this particular system possesses, especially when you're trading CFDs, if you're gonna stay in this range for about 2014 to 2021. That's about 6 7 years, being in one trade. And if you're trading CFDs, those overnight swaps will kill you. I haven't found a way around that as yet. I haven't found a caveat to that as yet. But boy, the swaps will kill you. Granted, from time to time, you'll get a bit of dividends, which may or may not offset it. And the worst thing is that it gets stuck on this range for years and years, and then you're in this trade, and then it breaks lower and stops you out. So not only are you getting eaten on swaps, you also get stopped out. So it's a double whammy there. So that's the risk it poses. But essentially, it tries to ride the trend till its very end. Doesn't try to get to pick the very bottom or the very top. It tries to pick that bit in the middle. So I don't know if you've read the Reminiscences of a Stock Operator. JC Livermore mentions that the first eighth and the last eighth are the most expensive to try and catch. So you want to get on the trend as it starts to move, and you want to get out of that bus as the wheels come off, and which in this case a break to a lower box. I like the system quite a lot, and exiters have been something that I've been battling with for some time now. As you guys know, I like adding into my positions, and this was quite difficult to take profits or to take to exit positions at profit, because as a trend follower, I still want to follow the trend. And when I'm taking profits, I'm essentially saying the stock cannot go in higher, which of course that is patently false. From time to time, I'll get it right, and from time to time, I'll get it wrong. So I'm looking to implement this approach, on my trading. Buy stocks as they break higher, sell them off as they break to the lower box. And if I'm already in a box and I find a nice setup like a bullish flag or a falling wedge, I'll still trade those. However, only if they're breaking higher, or they're in a box that has already been established. For example, if I'm sure there'll be an example. If I find a bull flag while still in this range, I'll take it, especially if it's on the lower half of this range. I'll take the trade, and then when it breaks through to the next box, I'll then add into the position. So no more take profits on my trades, and my risk reward will be calculated based on the next the resistance of the next range. But yeah, essentially I'll just be trailing my stop until the market is dying. And this also is in line with how I'm trading at the minute. And my 60 and 30 week exponential moving average are still part of the key component of my trading system. So I'm only going to take long positions on stocks that have the 60-week exponential moving average below the 30-week exponential moving average, and they're breaking to a higher box. So if my exponential moving average are pointing downwards and the stock is breaking higher, I'm going to stay away from the trade. I think a good example is Telkom. We'll look at it in just a sec. I'm going to step away from I'm not going to take that position until those two moving averages have crossed. So that's it about the box theory. Let's get into some charts now. First, looking at Tiger Brands. Let me first remove all these drawings, and let's try and implement this box theory into Tiger Brands. Okay, that would be the resistance there. That would be our box. So what I then do, I prefer switching off the chart so that I don't have any biases in terms of where the next range should be in. So I will then pick up my price range tool, place it on top on the resistance line. That's where the next box would be, and then I'll just stack. I just stack these boxes on top of each other like this, or these ranges, whichever term that you prefer. And this is a weekly chart, but you can do it with any time frame that you wish. I just like weekly charts as my primary trend. When I look at the overview, I look at, and when I look for a primary trend, I look at my weekly chart, and then I take my trades on the daily chart. So now that I have my boxes stacked on top of each other, and I'll add more as the stock trends higher, if it does trend higher. And then when I put it back, as you can see, it's uncanny how it traces support and resistance through these boxes on the way down and on the way up. As you can see, sometimes it'll stay on the box for a while. Sometimes it'll spend a couple of weeks and then it's out. But for as long as it's breaking higher, I want to be in that stock. So Tiger Brands at the minute look like it wants to break into the new box. But that resistance, that 216 resistance held today. So I'm looking for a close around 219, 3% higher. If I bring back my 30 week exponential moving average and my 60-week exponential moving average, they look pretty close from crossing. In fact, they just they quite close from crossing, and as it crossed through, and I'm sure these two would cross as well. I'll put my stop just below that 188. Those lows there around 188, and as it breaks back into this lower range, I'll then get stopped out. But if it keeps breaking into higher boxes, I'll keep adding into my position and trading my stop behind me. So it doesn't break any of my current rules. It fits well with the way that I'm trading, and that's what I want. Whenever I find something that alters my trading system, I don't want it to break any of the current rules, because that introduces ill discipline into the trading process. So next on the list is multi-choice. As you can see, also multi-choice, it's relatively new in the market. So this box theory applies very, very seldom on multi-choice, but there's a two ranges that have clearly been defined on the stock using the similar process. Support resistance, place it on top of each other. As you can see, we bitterly close to, if I remove all my drawing tools, if we put a support there, and we draw it upward to resistance, and then put that price range tool to get a sense of the next box. So it's currently trading on its next box. So I'm looking for a breakthrough and a close below that 148 level. But I had my resistance level there. So I'm looking for a breakthrough that 140, and then I'll jump into multi-choice. Multi-choice has been a stock that I've been watching for a while on that ascending triangle pattern there. So I'm looking for a break higher, and then I'm gonna jump into the stock. Next on my list is ASPEN. Similarly, I've drawn my lines here using these light gray lines, and I've locked them nicely prior to recording the video. So as you can see, 30 now is above the 60. So I'm just waiting for the breakthrough that 147 level. I did enter into this position on this, if I jump back into my daily chart, on this bull flag there. I'm already in this position, as I mentioned a week ago. But as it breaks through that 147, 3% higher, around that 150, I have a around 154 150 level. I have an alert on ASPEN. I'm going to jump into this trade as we cross through 150, and I'm going to trail my stop as we break into higher and higher boxes. Similarly, as you can see, this range is almost equal to this next range, and it traces support and resistance. And you can pick up any chart, you'll see this pattern emerge. And I'm not sure with other markets. I've only tried it in equities. I haven't tried it in gold, silver, but I don't see why it shouldn't be the case. So clicks looked like it was going to break today, but came back into this box, but closed just above it. So I'm looking for a 3% break actually. I'm looking for a break and close 3% higher than 257, and then I'm gonna enter into clicks. I'm gonna pull my stop around the halfway through this current box, and I'm gonna trail my stop as we break higher. Another one is Coronation, which is one of those great examples of these the box theory with addresses that prop issue that it has, that I mentioned earlier about being stuck in one box for a long time. As you can see, you got stuck here for since July. Let's see if we can get our date range until you got stopped, until it broke down there. So it took about 234 days stuck in this range until it broke lower, and then when it broke back into this box, it stayed in this box for another 230, about 244 days. So for 244 days, stock is doing nothing, and you're in this trade. Swaps are killing you. Granted, dividends are being paid, but as to the amount of dividends that you're receiving is enough to cover the swaps. I'm not sure. I haven't done the math, but when a stock stays in the range for quite a while, usually when they break quite aggressively. As you can see here, it broke quite aggressively as it broke to the downside, and similarly on Coronation, it broke quite aggressively. In fact, it didn't stay for a long time on the second box. It didn't take. It then broke into the third box, but came back. So I'm looking for a decisive breakthrough to the next box, and then I'm going to add into my position on Coronation, trailing my stop behind me accordingly. Similarly with Exaro, but Exaro came bitterly close to. I thought it was going to break through and close above 180, but didn't. In fact, it closed smack on 180. The close today was 172. Yeah, was 180.36 cents. So I'm waiting for the breakthrough, that 180 level, and then I'm going to add into this position on Exaro, and trail my stop accordingly behind me. It's a trade that has been showing me some green at the minute. I entered on the break day and then again on this break day. So on this trade, it was purely by coincidence. I was following the box theory without necessarily knowing the box theory. So now that I'm trading the box theory, it fitted perfectly well into this trade. Last on the list is SPA. A similar story is SPA. I got my range, and SPA, which has been there for an age. Which this is incidentally the chart that we were looking at when the video started. It has been on this range for an age, and I'm expecting the break. If it breaks high, I'm expecting that break to be quite aggressive. So instead of just waiting for a candle to close, I'm gonna put a buy stop order, maybe 3.2% through that break, and if I get triggered, and my stop would be below that pullback there. In fact, below those lows there, around 185. So that if it breaks back to this 151 to 212 range, I'll get stopped out. So another thing that I'm looking to investigate is, so I'll have my boxes on the weekly chart, but also look for boxes on the daily chart to see if I can spot some opportunities there. So that's it for today's video. Be sure not to miss another episode. To subscribe if you're new, hit the bell notification button, drop a like if you like the content. Thank you for hanging with me. Check you next time on the Village Trader. Cheers.